Ready to uncover urgent financial insights? Today's episode breaks down powerful investment opportunities in tiny homes, exposes the rising tide of illegal short-term rentals, reveals critical tips for negotiating the best home deals, and warns of a stormy economic future. Expert guests offer predictions on housing affordability, recession risks, and market shifts. Don't miss these must-know strategies and forecasts. Like, subscribe, and stay ahead. Today, on Real Estate in Review, we will summarize the following videos. From BiggerPockets, we have Are Tiny Homes a Good Investment? How much a $50,000 house makes. From Wright, we have Had Enough? Marley Price has an answer. If not me, then who? From Sachs Realty, we have How to Negotiate Your Best Deal When Buying a Home. From Real Estate Mindset, we have It's Over. Data proves recession. Layoffs will skyrocket. From Real Estate Mindset, we have Hurricane Beryl slams Houston. 3 million people blindsided. Rents sky high. Housing affordability is at rock bottom. Sounds like a bad reality TV show, right? Well, hold on to your tool belts, folks. In today's episode of BiggerPockets Real Estate Podcast, our dynamic hosts, Dave Meyer and Henry Washington, are chatting with Stephen Harrow about a pint-sized but powerful investment opportunity, tiny homes. Tiny homes could spell big profits for investors. Stephen Harrow dives into the costs, benefits, and logistical challenges of investing in tiny homes. More than just a trendy way to live, tiny homes offer a solution to the dire lack of affordable housing while promising impressive returns for savvy investors. Here are the key points discussed by Stephen Harrow: market dynamics and affordability. With rent and housing costs skyrocketing, many Americans struggle to make ends meet. Tiny homes present a cost-effective alternative in a market where affordable housing is scarce. Costs and comparisons. Building a tiny home costs between $35,000 to $55,000, significantly cheaper than traditional homes. The average tiny home is about 500 square feet and costs roughly 14% of a typical house. Investment models. Potential to buy land with minimal zoning restrictions to set up tiny home communities. Communities can be built on existing RV parks or other areas with pre-existing infrastructure. Financial viability. Tiny homes can rent for about $1,400 a month, providing a lucrative return on investment. Financing options are available through personal property loans, making this an accessible investment. Insurance and quality. Tiny homes are insured similarly to personal property, with premiums ranging from $300 to $900 annually. Models built by reputable builders like Stevens Company maintain high construction quality. Tenant demographics. Biggest demographic for tiny home rentals: women 55 and older who are single. Tiny home communities attract a wide range of tenants, including retirees and remote workers. Stephen Harrow made the following predictions. Rising popularity. Expect a growing market for tiny homes as more investors and tenants discover their affordability and potential for high returns. More municipalities may ease zoning restrictions to allow tiny homes, further boosting their viability. Increased community developments. Expect more investors to develop tiny home communities, particularly in areas with low land costs. Stephen Harrow wraps up by emphasizing that tiny homes aren't just a fad, they're a smart investment tactic poised to bridge the affordable housing gap. If you want to get started, do your homework about zoning regulations and consider starting small before scaling up. Ready to make a big impact with tiny homes? Reach out through the links provided in the show notes. And remember, even small footprints can make big steps in your investment journey. Hello, everyone, and welcome back to M3 Market Update with your favorite real estate sleuth, Wright. Today, Melody takes a deep dive into housing affordability and the illegal short-term rental crisis with a remarkable guest, Marley Price. Marley Price has taken on the mission to enforce city ordinances against illegal short-term rentals in St. Petersburg, Florida, aiming to return these properties back to the long-term rental market and help alleviate the local housing crisis. She believes that the abundance of short-term rental properties is significantly contributing to the housing affordability issue and wants to hold property owners accountable. Here are the key points discussed by Marley Price. Marley's campaign against illegal short-term rentals. Marley started her crusade when she discovered a short-term rental operating illegally on her block. She's reported 150 properties so far, targeting primarily outside investors who violate local ordinances. St. Petersburg's rules. Short-term rentals for less than 30 days are only allowed 3 times a year unless the owner lives on the property. Challenges and support. Marley receives a mix of support and backlash, with local residents supporting her efforts while disgruntled landlords reach out in frustration. Local residents appreciate Marley for her efforts to maintain neighborhood integrity, while landlords express anger over enforcement of long-existing rules. Market impact. Short-term rentals are overwhelmingly operated by out-of-state investors, with 58% of reported properties owned by those outside Florida. The rise in short-term rentals aligns closely with drastic increases in local rents, highlighting their impact on housing affordability. City Council and legislative actions. Marley has been actively engaging with the St. Petersburg City Council to advocate for more rigorous enforcement. Pending legislative changes could provide tools for better regulation if passed, but also risk preempting local authority, depending on the state's decisions. Marley Price made the following predictions: increased regulations and enforcement. Marley anticipates more stringent regulations and enforcement in response to the increasing number of illegal short-term rentals. She expects the city to potentially hire dedicated personnel to manage short-term rental compliance. Greater local action. With growing frustration among residents, Marley predicts more individuals will join her efforts, leading to a larger grassroots movement for local housing justice. Marley's mission underscores the significant impact that dedicated civic action can have on local communities. By enforcing existing regulations, she aims to boost the availability of long-term housing and contribute to resolving the affordability crisis. Viewers are encouraged to research their local short-term rental laws and consider getting involved in similar advocacy efforts in their own communities. As Marley says, if not me, then who? Welcome to Sachs Realty's Tuesday Night Podcast. Tonight, Todd Sachs is joined by Stuart Epstein, a loan officer with 22 years of experience in the mortgage industry. Together, they'll dive into the nitty-gritty of home affordability and what's happening in the market, especially key tips for home buyers and sellers. Stuart's background in accounting and his love for Excel spreadsheets make him a numbers guy who found his true calling in helping people achieve homeownership. In a rapidly changing real estate market, understanding how to negotiate the best deals, be it for buying or selling a home, is essential. Todd and Stuart focus on actionable tips about negotiating smarter deals, preparing financially, and maximizing home inspections to save money. The conversation reveals insights about the current market conditions, mortgage options, and transparent financial dealings that will empower both buyers and sellers. Here are the key points discussed by Stuart Epstein. Market trends. Interest rates have come down, and home prices are following suit. Stuart and Todd have seen an increase in price reductions on the MLS, indicating a buyer's market. They emphasize the rise in inventory, especially in the DMV area. Credit scores and mortgages. Importance of credit scores. Timely payments and credit utilization are critical factors, distinguishing consumer credit scores from lender-pulled credit scores. Shoppers should understand loan estimates, negotiate lender fees, and be aware of different lending products like FHA, VA, and conventional loans. Home inspections and price negotiation. Researching the history of a property can reveal withdrawn and relisted homes, giving buyers an edge. During home inspections, ask sellers to move furniture and clear access to key areas. Better to negotiate a credit for repairs rather than having the seller fix issues. Stuart Epstein made the following predictions. Market downturn. Predicted further drops in home prices due to increased inventory and rising consumer debt. Potential for more buyers entering the market as interest rates stabilize or decrease. Increased buyer power. Buyers will have more negotiating power for both home prices and contract terms, especially with home inspections. Overall, Todd and Stuart highlight the necessity for buyers and sellers to be well-informed and proactive. Buyers should get approved for a mortgage with a thorough understanding of their credit, negotiate lender fees, and not skip a home inspection. Sellers should understand the importance of fair pricing and transparency. For everyone involved, The key takeaway is to leverage negotiation tactics and market knowledge to achieve the best possible deal. Welcome back to Real Estate Mindset. Today, your host, Eric Nelson, is diving deep into a topic destined to rock your world and your wallet. Buckle up for an electrifying exploration of recession indicators that almost shout, "It's over." Do layoffs and economic turmoil scare you? Well, hold on to your hat, because Eric's going to break it all down with data you can't ignore. Eric Nelson argues that the data proves beyond a shadow of a doubt that a recession is either imminent or already upon us. Drawing from multiple recessionary indicators, he's here to warn us about the economic storm ahead and its direct impact on jobs, prices, and the stock market. Here are the key points discussed by Eric Nelson. Recession indicators. Eric highlights the importance of various recession indicators, including the U3 unemployment rate, which rose to 4.1% in June 2024. This uptick triggers the Shaheen rule, pointing to an impending recession. Another crucial indicator he mentions is the inversion of the 10-year and 2-year Treasury yields, which has persisted for over 2 years, a historical sign of an impending recession. Government and economic data. Eric discusses the alarming trend in government job numbers, with government jobs accounting for 25% of all jobs by the end of 2023, a sign typically seen right before major recessions like the Great Recession. Deficit spending is through the roof, with a year-to-date deficit of $1.2 trillion, echoing the figures last seen during the 2009 financial crisis. Consumer impact. Recession means job loss, says Eric. He argues that unemployment is rising and pain is only just beginning. He emphasizes preparation, discipline, and the importance of saving money during these turbulent times. Quotes to remember: if you're a hater or a disbeliever, then your advice is as good as a used diaper. Eric's humor aside, he's serious about urging viewers to prepare for what's coming. Eric Nelson made the following predictions. Stock market decline. Eric warns that if recession strikes, the stock market could plummet by as much as 30%. He bases this prediction on economic theory and indicators currently flashing red. Worsening labor market. Eric forecasts that the labor market is set to deteriorate further, with unemployment rates expected to continue rising sharply once the recession officially takes hold. In summary, Eric Nelson presents compelling evidence and indicators showing that a recession is on our doorstep. He stresses the importance of preparing and tightening one's financial belt. His call to action? Save your money, rebudget, and brace yourselves for what's to come. Don't be blindsided by economic downturns. Be a recession survivor. Welcome to another gripping episode on Real Estate Mindset. Today, our host Eric Nelson is taking us on a whirlwind tour through Hurricane Beryl's wild impact on Houston. Hold on tight. The core thesis of this video is to provide a first-hand account of Hurricane Beryl's impact on Houston, detailing the storm's progression, damage, and the ensuing challenges faced by residents, including flooding, infrastructure collapse, and the spike in insurance premiums. Here are the key points discussed by Eric Nelson: hurricane's arrival and immediate impact. Eric starts his update at 4:30 a.m., noting initial rain and wind, but not much destruction initially. By 6:50 a.m., plants are blown over, and the storm's intensity is increasing. Rising concerns and infrastructure damage. Eric notes cell and internet service loss, demonstrating the storm's effect on communication. By 8:30 a.m., wind gusts and minor flooding are evident. Concerns rise about the wider impact on Houston residents and infrastructure. The coastline is hammered, and Eric's household experiences a personal level of infrastructure failure. Impact on Houston neighborhoods. Trees and power lines are down, blocking roads and causing extensive property damage. Eric relocates his family to a hotel due to power outages, highlighting widespread issues across neighborhoods. Economic consequences and insurance. Significant property damage raises concerns about insurance premiums skyrocketing, making it unaffordable for many residents. Eric predicts an even tougher market for both property owners and renters due to the financial impact of the storm. Community and personal struggles. Residents clean up debris themselves due to limited professional help. Eric shares the challenges of lacking power, gas shortages, and long lines at grocery stores and gas stations. Eric Nelson made the following predictions. Long-term property market impact. Eric forecasts that insurance premiums will skyrocket, exacerbating the already high cost of owning property in Houston. Increased preparedness for future storms. Eric plans to book hotels in advance for future hurricanes to ensure a swift and safe relocation for his family. Eric concludes with a powerful reminder to always side with caution and prepare for the worst. He emphasizes how crucial it is to be ready for natural disasters, not just for safety, but also for financial stability. His call to action: plan ahead, stock up on essentials, and always stay informed. In this video, Stephen Harrow highlights the financial attractiveness of investing in tiny homes, focusing on their cost-effectiveness and growing market demand. Marley Price addresses the negative impact of illegal short-term rentals on housing affordability and community integrity, calling for stricter enforcement. Stuart Epstein discusses strategies to navigate a changing housing market, emphasizing credit management and negotiation tactics. Eric Nelson warns viewers of an imminent recession, underscoring the importance of financial preparedness. They collectively emphasize the importance of informed investment, community advocacy, and proactive financial planning. Thanks for watching Real Estate in Review for July 10th, 2024. If you'd like more time-saving content, please remember to like and subscribe. If you have ideas for more channels you'd like to see summarized, drop a comment below. See you next time.